On board Neeraj Dewan as well. Neeraj, hi, good morning. Good to have you on the show. Are you surprised that on one hand you've got the West Asia conflict only escalating, but markets are just so complacent?
Yeah, good morning. Yeah, yesterday's move was, I think, quite surprising for a lot of people because the way market reacted and the way mid caps also did well yesterday. But then I think yesterday there was expectation that the conflict may end sooner than what people had been expecting over the weekend. I think you got some indication there, and crude also didn't go up that much like it had reacted on Friday. So I think that's why I think our market took that opportunity and there were some buying on the dip. But I think today it's become a little different. Again, you are getting a feeling that maybe that was yesterday was just, I know I watched and today again things seem to be deteriorating. So I think it's still an evolving situation. We're still out of the woods there. So, there can be some, there is a possibility that it may increase the clashes increase before they subside and, before some truce is reached. So I think one needs to watch out for that.
All right, so that's where we see the tensions escalating. But back home, Neeraj, the Indian markets are indeed showing resilience and a lot of sector churning that is at play. Select oil and gas counters are making a comeback. Definitely with the theme that we are seeing shaping up globally. But along with that, IT is also one of those strong sectors which is now showing resilience. Give us some sense that in this sector churning, which sector are your preferred bets?
Yeah, actually, I stay focused on domestic consumption theory, domestic economic revival, domestic development stock, whether it's infrastructure, capital good, and even banking and NBFCs, housing finance companies, because inflation has been quite low and interest rates are down and they have reached a level where, you can get some pickup in consumption based on that also. So consumption stocks should also do well, even staples because of the the FMCG space stocks because of the low inflation and because of the good forecast for the monsoon ahead. So all these things augur well for domestic consumption. I think domestic economy related stocks. That is where I stay focused on. IT maybe may have made a base now, so may not make sense to sell. But I think I'll still need some more indication of what is happening globally as far as US is concerned to get a view where I feel a long term again sustained up move can happen in IT. So there I still remain neutral right now.
Okay, so that's the take on some of those IT names, but another stock that's going to be in focus today is going to be Z Entertainment, because we understand the board has given its nod to issue fully convertible warrants, and these warrants are going to be issued to promoter group entities. Promoters will be investing 2,237 crore rupees and raising their promoter holding to 18.4%, and this is going to be done via the issue of 16.95 crore fully convertible warrants. And the promoters are going to be infusing an amount worth 2,237 crore rupees via warrants. Now, what we understand is yesterday Z Entertainment held two board meetings. The first one was to talk to their consultant, that's JP Morgan. They have asked for the consultancy services of JP Morgan to help and understand what the market sentiment of the stock is, how the company is valued in terms of investors' eyes. So a lot of deliberation on that was done in the first meeting. The second meeting focused on the solutions that were given to them by JP Morgan, out of which this fundraising via convertible warrants was a solution that the company went for. They decided to do this at a price of 132 rupees per share, even though the SEBI instructed price was around 128 rupees, but they thought that the promoter should be putting in a little bit more to the company. This would reflect positively in terms of the company's finances and for the investors, which is why this has been done at 132 rupees per share. Now, when you take a look at what Motilal Oswal is making of this development, they're neutral on the stock with a target at 150 rupees that has been hiked from 125 rupees earlier. According to the press release is what they say, the proposal to increase promoter shareholding was first submitted in May, and despite the recent run-up that the stock has seen, promoters have shown their commitment to the business by subscribing to warrants at a higher price. On the back of this, they believe that infusion will be raised share and the effort to raise shareholding should be viewed as sentimentally positive for the stock. This could also bring in some renewed interest from other financial investors. However, they flag off that the use of fundraise will be a key monitorable to watch out for. So they're building in a CAGR of 4%, 7% and 8% in revenue, EBITDA and PAT over FY25 to 27. So that's the reason why Z Entertainment is going to be in focus. But Kunal, what are you making of Z Entertainment on the charts? It's been through troubled waters of late, but do you see any signs of recovery?
Yeah, there are signs of recovery for Z Entertainment. In fact, the recent recovery from 110, 112 rupees towards 135, 130 plus mark where the stock is trading right now has been met by a lot of consistency. I remember, I think 2024, August, September somewhere, when the stock had come back above 130 plus mark, that was the time when the stock had first given confirmation of a break of its 200-day moving average. Then came the 6-month correction for the entire market, and even the stock corrected from 135 plus levels towards 110 odd mark for itself. And now the stock is back again about that 130, 135 plus mark, which means that there is a dual confirmation the stock is showing. One is the breakout of its 200 DMA. The second is in terms of higher setup of volumes for the stock price, and the second attempt towards a break of that 135 mark. That I believe is a very strong indicator that maybe the worst for Z Entertainment could be behind into the stock price trend. So this could probably be a strong trending move for the stock price. It may be a little bit more gradual because that's where initially we see stock prices which come out of major bear markets and major consolidations, that the initial move is a lot more gradual, and once the news flow, the data point starts to become a lot more positive, that's where we believe that trend starts to evolve quite strongly. So I would believe that this is a good zone where traders could look at a buy on Z Entertainment, but only from a long-term play.
All right, so that's about Z Entertainment. Let's watch out for that. It could be a long-term bet. That's the take coming in from Kunal. But Rudra, what about the insurance counters? Because they are making a strong comeback. Look at the move yesterday. We have seen in SBI Life, HDFC Life, they were the top gainers in the Nifty 50. And within the larger F&O space as well, a lot of these stocks are showing momentum. Any stock that is standing out for you right now?
Definitely insurance as a sector is on the buy list for me, and HDFC Life is my top pick there. Yes, stock coming towards that all-time high levels of around 790, 800, and once it decisively crosses that 790, 800 mark, a move towards 4-digit 1000 is possible on HDFC Life. So on every dips to levels closer to that 740, 750 area, from current market price, I will be buying HDFC Life, accumulate it on dips to 750, have a stop loss of around 735, and look at targets of around 1000 to come on HDFC Life. Also, if you see the chart patterns of SBI Life, or even for that matter Bajaj Finserv, they also look very, very strong to me. So for me, the second choice after HDFC Life will definitely be SBI Life. Again, strong support is at around 1700 zone. At current market price and on dips to 1700, buy SBI Life. Look at targets of around 1930 and then 2000 to come on SBI Life. So definite buy on HDFC Life and SBI Life.
Okay, that's two buy call coming in on insurance plays. But the one segment that I want to bring up is the entire chemicals, pack right now, because higher crude prices, even though they may have rebounded overnight just yesterday, but the fact that crude prices on a higher side will definitely spur higher chemical prices as well. Neeraj, anything that you're liking within the chemical basket, although most of these stocks have already run up a fair bit?
Yeah, I think chemical basket should still remain strong. Those stocks have run up, so it'll be difficult to pick up now after the run up. But I think if one is holding, they should keep on holding to the stock. Even something like a SRF or the other stocks, even the fluorine gas stocks. There also, I think demand picks up around this time. So I think these stocks should be there in your portfolio if you are holding on to them. But to pick up now after the run-up, or last 2-3 months, we've seen little run-up happening there. It is difficult to pick up specific stocks at these trends.
Right. Oh, yeah, absolutely. Just yesterday we were speaking with Ajay Joshi as well, and he too highlighted that Deepak Fertilizers, RCF, GNFC, SRF, these are all very, very interesting plays still. Just looking at the texture of the market, and yesterday too, the defense pack held out. BEL has been quite the strong show from the last few months, so to speak. But Neeraj, what is your own sense? If someone's looking to add afresh into a BEL, HAL or any other, would you recommend that?
Yeah, see, there are two things. If someone is a long-term investor, even after the run-up, defense is one space where, they're going to be budget allocation, expenditure, they can be export opportunities. So they will continue to be strong even in the longer term. Shorter term, definitely, because the stocks have run up, in the last couple of months, they run up a lot. So there might be some consolidation which may happen. But for a long-term play, I think even now one can pick up these stocks and stay invested in them for a longer term.
Okay, so that's the take on some of these defense names. But Neeraj, even in if you take a look at some subsectors inside defense, let's talk about some of these shipping companies. A lot of them have seen a run up once again in the last couple of trading sessions. Given the kind of surge that we've already seen in a couple of these names like SCI, Garden Reach, Cochin Shipyard, would you still be advising a buy in all of these stocks?
Something like a Garden Reach or a Mazgon Dock, these companies I'm still positive on. But like SCI can be a move because of the prices going up because of the Iran-Israel clashes. So they may be impact. I think one that is suppose that so that is settled and there's a truce there. I think you may get again some reaction on the downside from SCI. So I'm not positive on stock like SCR or even Cochin Shipyard, but something like a Multod or a Garden Reach, I think they are good long-term plays.
All right. That's about some of these shipping counters that are showing good momentum indeed. But along with that, today all eyes will be on Godrej Properties as well, as the company has acquired a fresh 16-acre land in Pune, and this project will be a premium housing project which has a revenue potential of 3,100 crores as per the disclosures. And Kunal, help us with the chart check on this one, because of late the real estate counters are showing a bit of a momentum, especially after that big RBI bazooka. But what exactly on Godrej Properties are you spotting right now?
Yeah, it's been a very average performer when you look at Godrej Properties. Of course, the stock has a lot of potential, but I believe that eventually the stock should make a very good comeback for itself. So when we look at this comparison, DRF has done reasonably well. Macrotech Developers or Lodha, that's a stock or a chart which has done fairly well for itself over the last 3 to 6 months. Then you have the mid cap end of the the real estate stocks, the likes of Prestige, etc., which have also done reasonably well. And Godrej Properties apparently, on the other hand, is just about still struggling to break past above its long-term moving average at 2400, 2450 odd mark, where the stock is trading right now. So which means that the stock is taking its own time to try and just break past above a major resistance. I believe that momentum eventually comes back when you see stocks breaking past above a major hurdle. That could happen once the stock breaks above those 2500 levels for Godrej Property. So a stock which has a lot of potential, so far has been an underperformer as such, or an average performer, but I believe eventually the stock should make a very strong comeback for itself.
Bunch of other stocks which are going to be in focus. There's NTPC as well. Remember, the board meeting is scheduled for June 21st. They're going to be looking at fundraising proposals. And then Biocon, wherein the QIP book opened, it's at 340.2 rupees per share, and they may offer a 5% discount at their discretion as well. Neeraj, what is your own analysis of Biocon? I don't know how closely you track this one, because a lot of ease out in terms of regulatory hurdles. Now you've got this sizable fundraising as well. I guess the next big overhang only seems to be succession, but up until then everything seems to be working up.
Yeah, actually there's been a lot of news flow around the succession also, and whether there can be some stake sale or not. So there are a lot of speculation which were there in the stock earlier. And now this, this QIP, in the shorter term, may, they will be interested in how to see who we're going to invest in the QIP. So that will keep the stock positive. But the medium term, what happens is that once you get this kind of a supply in the market, the big players, the big investors will invest into the stock for the long term, and then there won't be any huge demand coming, follow-up demand coming in. So over the medium term, I think the stock may, not give you that kind of a move, but this kind of inflow into the company for the longer term will do well. The stock should do well, depending on what, because what is happening is that performance on the numbers has not been that great lately. So that also needs to improve going ahead. So if that improves with that kind of a capital coming in and over the long term, I think the stock should do it.
The take on some of those stocks, but Neeraj, also help us with your take on Asian Paints. And Rudra, we'll come to you for a chart check on Asian Paints as well. But Neeraj, first up, now we've seen that Reliance has offloaded its entire stake in Asian Paints. Does this change investor perception about the stock now that Reliance is offloaded? Or do you believe Asian Paints also, that has been in the middle of the competition and the price war when it comes to paints, do you believe that now would be a good time to see any sort of run up, or do you believe that this is going to be sluggish going ahead?
I think still some more consolidation will stay as far as Asian Paints is concerned. There can be some short-term off move because the stock has been down and stayed at these levels for quite some time. So someone who's a long-term investor who's seen Asian Paints doing well over the years may take this opportunity to add up some to the portfolio, because a lot of people are, I think a lot of portfolios I know, majority of them are holding on to the Asian Paints stocks because over the longer term they made good money in there. So they may like to add some more, but I think I don't see any meaningful upside happening in Asian Paints over the medium term. So I think short-term move may happen, positive, but over the medium term, I think still there can be sluggish movement, some more consolidation in Asian Paints.
More consolidation is what you're expecting. But Rudra, what about you? If you were given the option to pick Asian Paints versus a Berger on